An interest-only mortgage is a mortgage, just like the name says, where you're only paying the interest. Now, most mortgages, part of your monthly payment is part principal and part interest. But with the interest-only mortgage, all you're paying is the interest. And that means you're not paying down the loan at all. You're just kind of surviving or treading water. So these types of mortgages tend to be a lot riskier for folks than a traditional mortgage where you're paying down the balance over time. Interest-only mortgages also might have adjustments where the interest rate could go up and down. So what happens now? And again, these come in all varieties, but let's take a 5-year interest-only mortgage. For the first 5 years, my interest rate and my payment are much lower than traditional mortgages. But what happens after 5 years? First, that interest rate could go up or down. Second, I have to start usually paying back all that principal that I haven't been paying. And so while an interest-only mortgage might give you the lowest payment now, it can pose the most amount of risk for you in the future because your payment can go up substantially. And so imagine if I was paying $2,000 a month on my mortgage, and all of a sudden my payment goes up to $3,000. In a lot of cases, that can become unaffordable for the homeowner. So something to be really careful of. Now, it's not all bad on the interest-only mortgage. Let's take my situation. If I'm an investor and I'm buying a home and I want to fix it up and sell it 6 months later, maybe I do want to keep my monthly payments as low as possible so that I have money for renovations and things of that nature. In that case, an interest-only loan may be very appropriate. I'm keeping my cost low. And again, I don't care what happens in the future because I'm not going to be owning the mortgage. I will have sold the property by then. So again, if you're considering an interest-only loan, really be cautious here. Make sure you know all of the terms of that loan, when the interest rate can go up or go down, when you have to start paying back the principal, and make sure it's appropriate for your situation.